Good evening, good morning, good afternoon, wherever you are, whenever you are. Hello. Thank you for watching my videos. It's Mike. It's January 12th, 2009. I'm in Hong Kong this week. So my news stories may not be as quite in-depth as I would like. However, I just thought I would say, hello, here I am, telling you the truth in the financial markets, trying to warn you of things. Now, my news base this evening will start with something a little comical, as usual. Comical, yes. I turned on the water in the bath this morning, turned on the hot water, turned on the cold water, got it to the right temperature, pouring out of the tap, turned on the shower, got inside, and was nearly knocked across the bathtub. Apparently they have no issues with water pressure here in Hong Kong. So if you're staying in the Holiday Inn Golden Mile in Hong Kong, please be aware, do not let your children into the shower by themselves. They will probably be knocked senseless. Okay, real news. There's been some debate as to whether the various bailout plans in the US or the UK are actually working. In The Guardian this weekend, actually it was on Friday I believe, but regardless, the US Treasury should learn from UK bank rescue. This is Congress telling the US Treasury to get their finger out and stop messing about. Why don't they do what the British government is doing? Because evidently their own plan isn't working particularly well. Well, funnily enough, this morning in The Independent there was an article, Treasury set to offer new guarantees to get banks lending again. The bankers went and visited Gordon Brown, the Prime Minister of England, of Britain, pardon me, and basically told our illustrious leaders, listen, your particular plan isn't working too well. Why don't you do what the Americans are doing and go and buy some bad debt? In a nutshell, folks, nobody quite knows how to sort this big mess out. Okay. Hey, there's that slump word again. Headline today in Times of London. In a slump, we need real jobs for real money. Okay, what's a slump? I had a comment this weekend from one of my viewers in England, because I can't watch the BBC here. But apparently the BBC have been using the word slump a lot. Well, I've been reading this book by Paul Krugman, winner of the Nobel Prize in Economics. Yep, this last year. The Return of Depression Economics. And on the back, he has this to say. Most economists, to the extent that they know about the subject at all, regard the Great Depression of the 1930s as a gratuitous, unnecessary tragedy. If only Herbert Hoover hadn't tried to balance the budget in the face of an economic slump. Okay, looking at history, what happened in 1929? The stock market collapsed in the United States. Herbert Hoover, who was president at the time, did a number of particular measures trying to balance the budget. Following the stock market crash, you had a classic recession. What at the time was called a depression, but would now be classified as a recession. Following that, you had an economic slump. Then after the slump, you had the Great Depression. Is that what the BBC is trying to tell us? First you have a recession, then you have a slump, and then you have a depression. Possibly. Okay. Bonds. Treasury bills, as they're called in the United States. I've had a lot of people call me insane. I've had all kinds of comments about me comparing the US dollar with the Zimbabwe dollar. Basically saying, you're completely nuts. The United States economy is so big, there is no way that the dollar can fail. Uh-huh. Okay. Here's how it works, folks. You ready for this? I'm going to explain how the United States gets the money. The Federal Reserve says, right, we're going to create some money. Okay? It says, right, we need to make $700 billion magically appear out of thin air. Perhaps for a bailout bill. So it creates this money. And then what it does is, in a series of auctions, it auctions off this debt in the form of Treasury bills. And somebody else buys this debt. So they give the Treasury Department a certain amount of money to buy the Treasury bills. And that money is then used to offset the money that was created by the Federal Reserve. Okay? Right now, Treasury bills are running at 0% for a 1-year and a 2-year Treasury bill, and something in the order of 2.25% for a 5-year and 10-year Treasury bill. Who buys these things? Well, desperate investors are currently buying them. Getting out of the stock market, they have all this cash, they're going to stick it in Treasury bills and hang on to it and receive a, either zero interest or minimal interest rate. Classically, who's been buying this has been the sovereign wealth funds for various countries, such as China, Japan, Saudi Arabia, Kuwait, United Arab Emirates, etc. They've been buying up this debt. What if they stop buying it? China, in a news article, quoted here, basically has decided it's going to stop buying this debt. And actually, it's going to issue its own bonds this year. It's going to issue in the order of $600 million worth of bonds. So, guess what, folks? China is not buying the debt. Has no intention of buying the debt at all. Article today, actually commentary today in the Telegraph from Ambrose Evans-Pritchard. Basically saying, okay, the next crisis is going to be bonds, Treasury bills. Who's going to buy this stuff? Now, he anticipates somewhere around about May time, the US bond auction will fail. What does this mean? Well, it means that nobody will buy the stuff. The only way to get anybody to buy it would be to jack up the interest on the treasuries. What will this do to the US dollar? At that point, when nobody buys these bonds, they're not going to, the first auction that fails is going to be, oh, freaky, some kind of market correction. Wow, dude. The next auction that fails will be, hey, hang on a second, let's just think about this for a minute. And then after that, people will be panicking. They'll be trying to sell their treasury bonds, what people have already bought, which is going to jack up the interest rate. So they're going to sell their treasury bond at a certain interest rate and get out of it and take their money and run, as it were. At that point, inflation will strike in a huge way, both in the US, and probably the same sort of thing is going to happen to the UK bonds. So Ambrose Evans-Pritchard predicts somewhere around about the end of May, beginning of June. Personally, I think it's going to happen before that, but this is merely a question of timing as opposed to whether it's going to happen or not. At that point, you're going to see huge inflation rates in UK and in the US. To the point where perhaps China will decide it's going to dump its existing treasuries, try to sell them to the lowest bidder. When that happens, you will see things like hyperinflation, a huge devaluation in the value of the dollar. Do you still think I'm a madman? Or do you think perhaps there's some possibility this can occur? The only way to save yourself, folks, from all of this, whether it's inflation or hyperinflation or whatever, it's coming. The only way to protect your money, if you have lots of money, buy gold. Buy serious amounts of gold. If you haven't got a lot of money, don't buy gold. You're wasting your time. When hyperinflation hits, you're going to have a hard time buying a loaf of bread. What I suggest you do is buy something that you can trade. So if you have a few $100s kicking around, and you're wondering what can you do with this to protect yourself in the future, buy chocolate, buy scotch, buy hard liquor. People will always want to buy that stuff. Buy cigarettes. Okay, if you're not a smoker, don't buy cigarettes, because that's, obviously going against the grain. But if you're a smoker, buy a bunch of cigarettes, stick them in the cupboard. When the economy starts collapsing, you wouldn't believe what you can trade for a pack of cigarettes, or even a whole carton of cigarettes. I know it's freaking me out as well. But hey, folks, think about things, prepare, take it easy, don't panic. Cheers. Peace.